But let's get to our favorite segment that we do every Monday, Midcap Mania with Nigel D'Souza. And the stock on his radar today is a company whose stock has risen a whopping 105% since June 2015, and their profits have soared 40% this quarter. Nigel, what's the gem that you've identified for us today?
Well, Sonia, the stock that we're talking about is Control Print. The stock has been on a bit of a run, as you said, and the company is into, where every time you buy something, you have this manufacturing product name, etc. The company, they sell printers that are used for printing this particular material, be it on cement, be it on even FMCG products. A couple of their clients include the likes of Hindustan Unilever as well as Imami. Now, this is the background of what exactly the company does. It's into coding as well as the marking industry. The total industry size is roughly around 600 to around 650 crores approximately, and the entire industry is growing at a CAGR of around 15%. The big players in the industry should come up for you. Domino has nearly around 32%, and Videojet, at one point of time, this company, that's Control Print, was a distributor of Videojet's products till 2017. Then that relationship fell apart, and then in fact this company has got into the same line of business. Currently they hold only around 16 to around 17%. The leader, Domino, has close to have double their market share in the market. Now, going ahead, this particular company, that's Control Print, is looking at increasing their total share to around 25%. So they're looking to get into that second or, in fact, the third position in terms of market leaders. The stock, it's doubled if you just take a look at it from June 2015. In the last 10 days, the stock has been under pressure. It was down close to around 8 to around 10%. Promoters, they have been increasing stake in the company. They've been converting some of their warrants, so that's always a good thing. Currently at around 56% approximately. Varinder had covered the stock as well in his favorite segment. So over there we saw that the numbers, last quarter numbers, were quite good. There was a growth on the top line. Margins have started moving towards the 29% approximately, and profitability as well has been moving up. So the last quarter numbers, they were fairly impressive. If you take a look at it on an EPS basis at the halfway stage, it is at around 13 rupees. So even if they replicate this performance, they should be at around 26, 27 rupees, telling you that the stock is trading at around 16 to 17 times. So it's not very, very cheap. Investors should note that in mind. What are the limitations? As I said, there are only around 10 to around 12 big players in the market. They are in fourth position. So that's one of the limitations, because the bigger players, they're really looking to eat into the market share. It's a technology intensive business. At one point of time, they were sourcing it from other players. Currently, they're in a tie-up with a German player. So technology is something that they need to focus on. They're dependent on partners for technology because that's really how the industry has been functioning. And finally, they have dependency on other sectors like the FMCG sector, the cement sector. They do some work even for Tata Steel. So they have a dependence on various sectors, but they can always adjust themselves. So that's one of the positives, in fact, if you look at it. In terms of the other positives, they have a clean balance sheet. Promoters have been increasing stake. The ratios as well are quite good. Margins at around 29%. The ROIC, in fact, is closer towards 22 to around 23%. So that as well is fairly positive. And I've went through the company's presentation, and they have said that, in fact, now localization of plants is to the tune of nearly around 96%. At one point of time, it was far below that particular level. So that's the stock that I've picked, Control Print.
All right, Nigel, thanks a lot for that. That's Control Print, a stock which has done well. But Noresh Mirani now tells you what to buy or sell today for a